G'day everyone, it's Michael from Jigsaw Tax here. Just going to give you guys an update of what we found this weekend during our research. And I've written an article, The Good, the Bad and the Ugly regarding JobKeeper. So let's get into it. Big change first up is the GST turnover. The ATO has modified that and is now allowing you to test based on cash or accruals. Good bit of information in there. Do have a read of that, but that could actually change the outcome for a lot of businesses, especially if you've invoiced a lot in March and those payments aren't coming in April. You may trigger that drop already. Yeah, it's a simple calculation when it comes to determining your 30% drop. There's no ifs or buts. Once you figure out your turnover and what's in and what's out, it's just a matter of determining whether you've had a 30% drop for the month, or your test month, or for the test quarter. Most people on online accounting software can bring that up within a few minutes and do those tests. One of the questions we do get asked is, what happens if my income increases in the following months? That's fine. ATO and Treasurer are clear. Once you pass the test, you remain eligible for the whole scheme up until the end of September. So the only reason we do need to do monthly reporting is so they can determine how the economy is going, and probably that they're going to be doing audits if they feel that entities are gaming the system. The next part that I did write about is the stimulus payments will be exempt from the turnover test. This is actually really good news because we've had a few situations where if the modelling showed that if they did receive a JobKeeper scheme payment, which could be quite significant in May because there'll be 3 lots of fortnights in one hit, that they would be ineligible for May. That's been clarified that it won't be the case. We're still waiting on clarification around the apprenticeship payment and the state-based stimulus payments. The business boost will be exempt, as it's already been advised that it's non-assessable, non-exempt income. Business participation, this has been really good. They've actually now allowed sole traders, partners, a director who may not be working actively being on the books under PAYG, an individual shareholder or trust beneficiary to be eligible for a JobKeeper payment, but you only get to choose one. So be careful, and it might be worth having a look at what else is available for other people in the group. The payment of JobKeeper, while the claim gets paid within 14 days of lodging the claim, the ATO has said that they will bring forward that first big payment to 14th of May to allow employers to make sure that they can fund that third fortnightly payment. So that's been a really good part of what the ATO has come up with. Now, the bad is a few things that I've got a bit of concerns about. We are dealing with policy on the fly. It's changing every day, literally. So what we could advise today might be different tomorrow. So just bear with us. We'll just see how we go. As accountants, we don't need to sleep anymore. We do have really tight timelines, and I'm really concerned that a lot of businesses who are eligible for an April JobKeeper payment won't be able to get their ducks in a row. And there's a few ducks, as anyone who's read that last article has seen. We've got to get this all wrapped up within the next 10 days. That's a lot of work to go through the eligibility test and get employees to sign on. Fair Work Act is always a concern. As accountants, we can't advise on it. Our insurance does not cover us. So a lot of people are trying to get advice from their solicitors or employment solicitors or employer sure subscriptions. We will do the best that we can within our own insurance and limited liability scheme guidelines, but please don't take offence if we push you back to Fair Work. The one in all in rule is still a lot of concern. I've had one client who doesn't want to pay one of the casuals because they don't like them, and they believe that they don't work enough. Nope, sorry, they get the full JobKeeper scheme payment of $750 a week, regardless of whether you like them or not. All employees must be included. All eligible employees must be included. And I'll talk to you about the problems of that below. Worth a read. There is also concern about interaction with other income support. Example I had was someone on disability support pension. If they do receive the JobKeeper, they would essentially be ineligible for DSP, require reassessment, lose their healthcare card, So it's very important that they actually do consider whether they are better off applying for the JobKeeper through their employer or just letting it go and stay on the DSP. In the case that I dealt with, it was the medical bills that are covered under the healthcare card were better off to be covered than receiving $750 a week. Employee entitlements are still a mess, whether it's a full stand down, partial stand down, reasonable adjustment to increase hours, whether JobKeeper acts as a supplement, etc. So this is a little bit tricky. Again, we can't really advise on the Fair Work side, but we can definitely help you with your entitlements and your superannuation guarantee. And workers' comp, we still don't know whether workers' comp will be affected by an entity receiving JobKeeper. That could be a huge premium increase for those who have casuals on the books who are now receiving JobKeeper. The ugly are my biggest concerns, and they've been concerns for a lot of other accountants as well. The biggest issue is that every employer must fund every eligible employee who decides that they want to partake in the scheme $3,000 for the month of April. If you've got a casual who earns, I don't know, $600-700 a month, but they're eligible, you've got to pay them $3,000. Where are you going to find that type of money? I've provided a real life example of one of our client situations where they need to find nearly 3 times their monthly payroll for a business that's operating at 40% of their turnover. I don't know why the government has brought that in, and it's inflexible and it's frustrating. So do check that out. There doesn't seem to be any leeway or concessions provided with that. We also have the ongoing issue with non-long-term casuals being excluded. Some of them have missed out by days. Some of them it's an industry norm that they move around within the same industry, but as casuals, again, I don't see anything on the horizon that would allow them to be included in this scheme, so please don't, and hope that they do. Same for non-residents. If they're not on one of the New Zealand subclass visas, or they're not a permanent resident or a citizen, they will not receive it. So don't waste time or provide an expectation to your employees that they may receive a JobKeeper. They're not. We're going to have questions about that because I know we've seen a few non-resident JobKeeper applications being submitted. The business participation through interposed entities, that's a bit of a killjoy, whereas previously they've opened it up to non-PAYG directors. If your income does pass through an interposed entity, so say a partnership that flows through a family trust, that flows through a beneficiary, that will not be allowed. So that's just a bit of a quirk in the rules. It will affect a few people, but hopefully not too many. Again, it's to make sure that no one's gaming the system. Admin entities, such as payroll companies that we do see a lot, will have a lot of trouble getting across that 30% drop. It's not based on a group, it's based on each individual entity. And that makes a huge difference. And that's what my weekend was spent researching this weekend. We've got some flexibility where we can move things around, but overall it's going to be tricky if you've got a payroll service company, because to trigger that 30% drop won't be easy. Employees refusing to work. Now, we've had 2 separate businesses come to me with this one. This is where maybe it was a young casual that basically they've realised that they're going to get $750 a week. Basically, if they sit at home, they may have. In one case, I do believe they have a valid reason to not want to work due to an immunosuppressant family member. But another one, it's a bit tough, and I think they just want to get their FIFA 2020 hours up on their PlayStation. So where an employee has said that they don't feel comfortable due to COVID-19 working, OH&S overrides all reasonable adjustment changes. So we are recommending that you do get advice, and I've got some commentary around that in the article regarding perspex screens, physical barriers, how you structure your roster. So again, it's not binding because it's not, we can't advise on Fair Work, but it's worth a read and doing your own research. And the last one is, the ATO and Treasury and Fair Work and the state governments are all saying that if you try to game the system, we will find you. Being an ex-ATO auditor, You'd be surprised how much data they do have on you, on your children, on your children's children. If you've gamed it, you will be found. But there are a lot of cases where it might look like you've gamed it, but you actually do have a bona fide reduction. In those cases, we're advising clients to really strengthen their supporting documentation, which is being prepared now in a live environment, and the ATO will look at that much more favourably than trying to come up with some sort of document pack in 2, 3, 4, even 5 years' time, where we won't remember what exactly transpired in the months of March and April. So that's about it. We'll be updating this constantly. And I'm sure a lot of you guys have read our most recent newsletter on how the process now works. Please note that we only have X amount of hours in a day to process everyone. So we're just asking everyone to fill out that form, go through our service offerings, and hopefully we can help you. But we're there to also to support you if you do want to self-manage this. You just need to get on top of it, because you'll have the additional barrier of getting all your MyGov IDs set up, which could take up to 2 to 3 days. I'm going to assume that there's going to be a flood of people trying to get their identification documents in. So just be wary of that. Well, till next time. See you guys.